I'm Jessica Vinton for IB Times TV, and joining me today is Mark Otto from Knight Capital, who's going to talk about this continued skepticism over the data coming out of China. Thank you for joining me again. It's a pleasure to see you.
Oh, thanks for having me back.
Absolutely, anytime. So there is more skepticism once again. I talked to you last month when their export data came out, but exports did increase even as shipments in the US and Europe decreased, which has a lot of people wondering, where are these exports going? Is it possible, as some analysts are suggesting from Bank of America, that they are inflating their figures?
It certainly is a possibility. However, macro data is a funny thing. You can look around the world and a lot of people are skeptical of all macro data. Like here in the United States, for example, with jobs data, a lot of people are speculating that, the initial jobless claims today came out and knocked the sock off the ball. So I think a lot of people are skeptical, depending on where you're standing in the world as to what macro data you're looking at. A lot of people here in the United States don't believe that our jobs data is actually as good as it says as well. So, you could look at China, but, throwing locks in a glass house is sort of a dangerous thing to do, I think.
And is it possible that hot money inflows disguised as trade payments are coming into China?
I've seen that report. However, obviously it's very hard to make certain of whether that's right or wrong. I think that's getting a little bit outside my wheelhouse.
Now, after the data that did come out yesterday, we are going to see that Chinese industrial production as well as retail sales numbers. What do you predict that we will see happen?
Well, I think we're hopeful that industrial production numbers will improve. I mean, last month they were a disappointment after the GDP number as well. So that definitely started a lot of people looking at China with a bit of concern. I think that going forward, we're trying to look for some stabilization in China. I think that, a lot of people don't take into account the fact that the 10-year change of power and the new leadership in China is more focused on being conservative going forward. They want to actually put into play many things that are going to actually benefit their economy for long term instead of short term. That's why their GDP is set so low at 7.5%. Many people see it as very conservative, and by the end of the year they're going to hit their target and then some. Most people are anticipating a number like 8 or even more.
And finally, you did say something interesting the last time I talked to you about not counting China out with their numbers. Should we still be maybe expecting to see some sort of growth and not worry too much about what's going on in Europe in terms of the global effect it's going to have?
Well, I think it is true. You can't really count out China. I mean, whichever side of the coin you are, as far as looking at the macro data and the numbers that are coming out, I think that one thing that people may fail to realize is that if you are trying to short China at this point in time, because of their authoritarian government, they could actually step in at any time and make a massive change overnight when it's not expected. So, they were concerned with real estate in China inflating, and it seems as though they were very quick to put in property curbs and react to it. So I think, historically, that's been a point that China has been able to make. They aren't the Eurozone. They don't have 17 countries, deciding on which color or shade or blue they're looking at. If they need to, they can be very aggressive very quickly.
Thank you so much for joining me. It was a pleasure to see you again.
Thank you.